The financial world is changing. No longer the exclusive domain of human brokers and analysts, it is increasingly being shaped by artificial intelligence. AI, in essence, refers to computer systems capable of performing tasks that typically require human intelligence. From processing vast amounts of data to making complex decisions, AI is rapidly transforming the financial landscape. Imagine a world where algorithms, not humans, manage your investments. This is no longer a futuristic fantasy, but a rapidly approaching reality. AI's entry into finance is driven by the promise of efficiency, speed, and data-driven insights capabilities far exceeding human limitations. This revolution is not just reshaping trading floors, but also redefining how financial institutions interact with their customers. Chatbots powered by AI are becoming increasingly sophisticated, capable of providing personalized financial advice and resolving customer queries in real time. The integration of AI into finance is still in its early stages. However, its transformative potential is undeniable, promising to revolutionize everything from stock trading to customer service. One of the most significant impacts of AI in finance is on trading strategies. Traditionally, traders relied on human intuition, experience, and market analysis to make investment decisions. AI is changing the game by introducing algorithmic trading. Algorithmic trading uses complex algorithms to analyze market data, identify patterns, and execute trades at speeds and frequencies impossible for human traders. These algorithms can process vast amounts of data in real time, factoring in news events, economic indicators, and even social media sentiment to make lightning-fast trading decisions. This shift towards automated trading has led to the rise of quant funds and hedge funds that rely heavily on AI-powered strategies. These funds are often able to outperform traditional funds by leveraging the speed, efficiency, and data crunching capabilities of AI. The increasing dominance of AI in trading raises important questions about the future role of human traders. While some argue that AI will eventually replace human traders altogether, others believe that human expertise will remain crucial for tasks requiring intuition and strategic thinking. AI is not just transforming how financial institutions invest money, it's also revolutionizing how they interact with their customers. The days of long queues at the bank and frustrating calls to customer service centers are slowly fading into the past, replaced by the seamless efficiency of AI-powered solutions. One of the most visible examples of this transformation is the rise of chatbots and virtual assistants. These AI-powered tools are now capable of handling a wide range of customer queries, from providing account balances to resetting passwords, without any human intervention. This not only frees up human agents to deal with more complex issues, but also provides customers with instant and personalized support. Beyond basic customer service, AI is also being used to provide personalized financial advice. Robo-Advisors, for instance, use algorithms to analyze an individual's financial situation, risk tolerance, and investment goals to recommend tailored investment portfolios. This shift towards AI-driven customer service is making financial services more accessible, affordable, and convenient for millions of people. However, it also raises concerns about data privacy, algorithmic bias, and the potential displacement of human workers. Case studies, where algorithms are already king. The impact of AI in finance is not just theoretical, it is already being felt across various sectors of the industry. Financial institutions are increasingly relying on AI to streamline operations, enhance decision-making, and improve customer experiences. From fraud detection to loan underwriting, AI is proving its mettle in real-world applications. These technologies are not just add-ons, but are becoming integral to the core functions of financial services. Take fraud detection, for instance. AI systems can sift through enormous datasets to identify suspicious activities that would be nearly impossible for humans to catch in real time. Traditional rule-based systems often struggle to keep up with the ever-evolving tactics of fraudsters. These older systems are limited by their static nature and can be easily outmaneuvered by sophisticated fraud schemes. AI-powered systems, on the other hand, can analyze vast amounts of transactional data in real time, identifying subtle patterns and anomalies that might indicate fraudulent activity. This allows for quicker and more accurate responses to potential threats. Another area where AI is making significant inroads is loan underwriting. The traditional methods are being revolutionized by AI's ability to process and analyze data more comprehensively. Traditionally, loan approval decisions were largely based on credit scores and human judgment, which can be subjective and prone to bias. This often led to inconsistencies and unfair practices in loan approvals. AI algorithms can analyze a wider range of data points, including social media activity and online spending habits, to create more comprehensive and fairer risk assessments. This holistic approach ensures that more factors are considered, leading to better decision-making. These are just a few examples of how AI is already being used to solve real-world problems in the financial industry. The integration of AI is not just a trend, but a fundamental shift in how financial services operate. As AI technology continues to evolve, we can expect to see even more innovative applications emerge in the years to come. The future of finance is undoubtedly intertwined with the advancements in AI, promising a more efficient, secure, and inclusive financial ecosystem. Efficiency and profits. The allure of thinking machines. The rapid adoption of AI in finance is driven by a powerful combination of factors: increased efficiency and the potential for significantly higher profits. Financial institutions are increasingly recognizing the transformative potential of AI technologies. Financial institutions are constantly seeking ways to streamline their operations, reduce costs, and maximize returns for their investors. AI offers a suite of tools that can help achieve these goals more effectively than traditional methods. And in this quest for efficiency and profitability, AI has emerged as a game changer. Its ability to process and analyze data at unprecedented speeds is revolutionizing the financial sector. AI-powered systems can automate tasks that previously required significant human effort, from data entry and analysis to customer service and risk assessment. This automation not only saves time but also reduces the likelihood of human error. This automation translates into significant cost savings for financial institutions, allowing them to operate with leaner workforces and reduced overhead. The efficiency gains are substantial, enabling firms to reallocate resources to more strategic initiatives. Moreover, AI's ability to analyze vast amounts of data and identify patterns invisible to the human eye opens up new avenues for generating profits. This capability is particularly valuable in areas like fraud detection and market analysis. Algorithmic trading, for instance, allows institutions to capitalize on fleeting market opportunities that would be impossible to exploit manually. These algorithms can execute trades in milliseconds, far faster than any human trader. The allure of increased efficiency and higher profits is a powerful motivator for financial institutions to embrace AI. The competitive edge provided by AI can be a decisive factor in the fast-paced world of finance. However, it's crucial to balance these economic benefits with the potential risks and challenges that come with widespread AI adoption. Ethical considerations, data privacy, and the potential for job displacement are important factors that must be addressed. The perils of letting machines take charge. While the potential benefits of AI in finance are undeniable, it is crucial to acknowledge the potential risks and challenges that come with this technological revolution. The integration of AI into financial systems promises efficiency and innovation, but it also brings forth a myriad of concerns that cannot be overlooked. One of the most significant concerns is the potential for job displacement as AI automates tasks previously performed by humans. This shift could lead to widespread unemployment and economic instability if not managed properly. Another concern is the risk of algorithmic bias. AI systems, if not carefully designed and monitored, can inadvertently perpetuate existing prejudices and inequalities. AI algorithms are only as good as the data they are trained on, and if this data reflects existing biases, the algorithms will perpetuate and even amplify these biases. This can have far-reaching consequences in decision-making processes. This can lead to unfair or discriminatory outcomes, particularly in areas like loan approvals and credit scoring. Individuals from marginalized communities may find themselves disproportionately affected. Furthermore, the increasing reliance on complex algorithms raises concerns about transparency and accountability. The opaque nature of these systems makes it difficult to trace the decision-making process. When an algorithm makes a mistake, it can be difficult to understand why or to hold anyone accountable. This lack of clarity can lead to significant issues in rectifying errors and ensuring justice. This lack of transparency can erode trust in the financial system and create challenges for regulators. Ensuring that these systems are fair and understandable is essential for maintaining public confidence. Navigating these challenges will require careful consideration and proactive measures to mitigate potential risks. Financial institutions must be vigilant in their approach to integrating AI. This includes investing in retraining and reskilling programs for displaced workers, ensuring they can transition into new roles within the evolving job market. Developing robust ethical frameworks for AI development is also crucial. These frameworks should guide the creation and implementation of AI systems to ensure they are used responsibly, and establishing clear regulatory guidelines for the use of AI in finance will be essential. These guidelines will help in maintaining a balance between innovation and ethical considerations, ensuring a fair and just financial system for all.